This article is coming from the Wall Street Journal. Escalating demand for soybean oil hits possible slowdown. Farmers and refiners are worried that a nascent boom in the market for soybean oil is being stalled by a challenge from an unexpected source, the EPA. Prices for soybean oil, a byproduct left over after crushing the beans for animal feed, soared to records last year, owing to growing government incentives to make it into diesel fuel. However, in December, the EPA proposed to mandate less use of biomass-based diesel through 2025 than many had expected, pruning the value of credits the agency issues to makers of biofuel. On the news, soybean oil futures dropped 15% in a week. The price of soybean oil has roughly doubled over the past 3 years, largely because of demand to make fuel for trucks and trains. The difference means companies have little economic motive to make diesel from soybean oil without government incentives. So it looks like the boom and bust of the price of soybean oil has largely been due to the government agencies, in particular the EPA. So let's go to the chart of soybean oil. Now this is the monthly chart of soybean oil, and it did reach an all-time high of $88 back in April of 2022, but since then it looks like it is pulling back and declining. You could say you have a head and shoulder pattern, which is bearish. And the shoulders don't have to be on the same level. This is the 13 simple moving average, which is turning down. Looks like the next stop for price is going to be at this pivot low on the monthly chart at $52. Right now price is at $54.60. So I'm just going to draw a line to indicate that, so when we go down to the weekly, we know where that pivot low is. Okay, let's go down to the weekly chart. You can see that the two moving averages are pointing down. You had a crossover. The blue line is the 13 simple moving average. The orange is the 26-day moving average. Price recently broke these pivot lows, and in the process formed supply. So let's say that we have weekly sellers at $57.50. Again, the next stop is 52. This pivot low is just a reaction to the left where you had buyers. Let's go to the daily chart. I like that as a zone, and I'll show you what I mean. This was a zone, or is a zone, on the daily chart. You had a drop in price. You had you had one basing candle, and then another drop. So leg in, leg out. Price pulled back, could not get to the zone. Tells you that there are some sellers in this area, and then price dropped. Price also dropped, breaking the pivot low to the left. But we're more interested to see how far price is going to go down. Don't see of anything of interest at this time. I'm also looking at volume. Okay. So where's price headed? This was the pivot low that we saw on the monthly chart. I do anticipate price continuing to come down to that area, but we should see price react and then continue down. I like this area right here. Not the prettiest of price structure, but you had an extended range green candle. You had some basing, and then you had price leave the zone before pulling back. Probably nipped the zone, and then it continued onward. So this is the target. We're going to say we have daily buyers at the 49 level. And let's just mark this here, denoting daily sellers. At 59.30. I do anticipate price pulling back. It may not get back to the zone, and then moving downwards, as price never goes in a straight line down or straight line up. It just goes in ebbs and flows. But this would be my final target, which is roughly $6.50 lower for soybean oil futures. Thanks for watching. Subscribe. Please like the video.